It's a full month of January. Full month of January, and then no single loss. Isn't that really insane? Is that like something that you have experienced before, maybe casually, like you traded for a whole week, a whole month, and then no loss, and then like it suddenly becomes like a normal, because like it's a part of your process now. What's your view on FOMC? What time is FOMC? Honestly, I've not even checked it. I think psychologically I did not even make my mind up to trade it, so I'm not even like watching it. But I could actually go up there, go sit by my computer, and then analyze and trade it with you guys if you so wish. I came out to briefly park my car anyway. The beautiful baby that it is. FOMC is 8. Wait, what time is FOMC? 8 p.m., which is like 7 p.m. Ghana time, which is going to be like 11 p.m. Dubai time. That's actually very late. At my end, 7, 8, 9, 10, 11. And it's actually now 8:36. Like, that's quite some time from now. 8:36 now. So I'm wondering, I need to come and park this car. I'm wondering, 11, am I going to be actually even awake? Because it's now 8:36. Because like I've seen so many guys, having chit chat about FOMC on Twitter. Everybody talking about FOMC. When it happens like that, then I want to trade it and help my community members. Let me check some few statistics from here. I'm checking from my other phone though. I'm checking from here. Let me go to Forex Factory and then see what we have there. Let me check the rate. Let me filter this thing. Let me remove all of this nonsense. Okay, let me leave the currency pair. Let me leave. Okay, in fact, I can just check them and then actually untick. So that I leave only the high impact and the medium impact ones. Apply filter. Okay, today is Wednesday. There's quite a number of fundamentals today. Was it CPI and what? FOMC. Let me check the previous rate. The previous rate is what's the name? Federal fund rate, FOMC. Oh wait, I have to pen this thing. How do I do that thing? Hold on briefly. Let me just quickly, because I'm not seeing the full screen. What am I supposed to do now? Quick share. I'm not able to do it. That means that I have to check. From my computer. But who can help me? Use the desktop view. Where is the desktop view? It's supposed to have turned automatically, but it's not turning. Okay, I've seen it now. I think I've seen it. But still, it's not even showing. It's not even showing. At the top right. Is it this one? You guys show me. Click on settings. Settings. And then what? It said that's a Samsung. It's at the bottom. You guys, you don't even know what you're talking about. A 3 dots. Okay, the 3 dots here. Three dot forum, trades, news, calendar, market. The 3 dots at the top. Oh God, you guys, you see how difficult it is to teach? Small thing you're teaching me, everybody's confused. Imagine now. The 3 dots at the top right corner. The 3 dots at the top right corner. Am I the only one who is not seeing the 3 dots at the top right corner? Rick. But anyway, I'm still not seeing it. Refresh the page. Okay, let me refresh the page. Oh, of the browser. Okay. Exactly, you see? The 3 dots at the top right corner of the browser. You know, you have to be able to be specific in teaching. Guys are saying 3 dots. I'm watching the whole space on the web feed, but you're not seeing on the browser. Then I come where? Desktop. You know, simple English. I think it's English that is your problem, you guys. See that those of us that teach you, we really try. See, they explain, John. By the way, from what I'm checking here, previous rate was 5.5. Forecast, we're expecting that it will be maintained at 5.5. I don't think it's going to be maintained. I don't think the rate will be unchanged. I really think that FOMC rate will change. I think it will drop. I think there's likelihood for rates to drop. There's so many reasons backing why rates may drop, which is going to be very significant. It's hard for me to just like explain all of it in like at a go, but I truly do believe that we're not going to have rates maintaining. I think when rates drop, it's going to render the US dollar very weak. That's my projection though, or that's like my speculation. But there's certain theorems backing why I am just assuming that the rate should drop. How do I even like keep you up to date with it? So there's, you see, as currency traders, right? We almost always just focus on one thing. We're almost always just focusing on the currency market, doing our technical analysis and stuff like that. But you know, the other time I was having like an in-depth study with my mentees in the Go Strategy mentorship, and I was really opening up the other aspect of the market to them. I was really, letting them really understand that we have the bond market, we have the commodities market, and then we have the equities market. And all of these markets heavily affect how the currency market will flow at the end of the day, you know. And then thinking about the fact that we've had Nasdaq US 30 literally creating crazy all-time highs, and also if you kind of look at in the bond market specifically, what the current state of the yield curve, there are so many instances that are currently pointing that macroeconomic wise interest rates should drop because they're currently at one of the all-time highs. prior to 2023, even starting from 2022, most of the US rates were just revolving around 1.5, 2, then run up to 3, 3.5, 4, 4.5, and now we have 5.5. It's like one of the highest interest rates that you'd have in any of these Western countries, and it's just about time that I feel like the Federal Reserve begin to like change their approach to their rate settings. And like I said, I've had a deep look into the yield curve. If you're not really into, or you don't have like a good grasp or understanding of the bond market, then mentioning yield curve is going to be like so foreign to your ears, right? So like the yield is another word for interest rate, right? Or interest, or yes, the best way to put it is interest. And then in the bond market, like everything depends on what the yield is saying, you know. Like investors are looking for higher yield on their bond prices, right? But there's a transverse effect of bond yield according to that relates directly with the price of a bond, right? So let's say like the yield are going up, instead of instigating a higher price of bond, it actually instigates lower prices of bonds. So I know that I'm speaking so many gibberish to a lot of people. They are literally wondering, Kojo, what are you saying? Is the market going to go up or go down? Are we buying or selling? That's what people are just interested in. But here I am talking too much economics. but I'm saying it because like it's not just a walk in the park to just assume that 5.5 and then forecast is also 5.5 and then it will just drop. It's not just from assumption, you know. You cannot just wake up and then assume. You have to have like a very deep thesis backing your analogy, and some of my thesis is what I'm sharing, you know. And some of these things, like it's not just 1 minute thing or 5 minute or 10 minute thing. It takes a lot. Even like now that I'm speaking with you, now that I'm speaking with you guys and sharing all of this, I have to still go back and really go and, you know, meticulously watch this, not only with relation to the macroeconomic aspect alone, but also with relation to the chart, what the technical aspect is also saying, because I gotta make sure that the charts are in sync with the macro. You know, one thing that is for sure that I've known over the years of trading is that technical analysis and fundamental analysis, they are in a dancing tune. Like one does not speak foreign language to the other. If the technicals are saying that the macro is supposed to drop, or the fundamental aspect of it is supposed to drop, tell you the truth, the fundamental will actually drop. It's so easy to rather predict the fundamental outcome of the market from technical perspective than using fundamental to actually predict the technical direction of the market. I don't know if what I said it made sense. It's so easy to predict the fundamental outcome of the market from a technical perspective than using the fundamental to actually predict the technical direction of the market. Does it make sense? Because like, let's see, I cannot watch these numbers here and suddenly assume that GBP USD will drop. But I can watch GBP USD and tell you that based on the structure of GBP USD, the interest rate is supposed to fall or interest rate is supposed to rise up. You get what I mean? So regardless of how clear the fundamental message is to me, I always make sure that the technical is also telling that same truth, you know, and then that's when I back my confidence with it. Sometimes when I even know that glaringly the fundamental is telling me that the market is going to drop or the market is going to go up, and then I'm watching the technical and the technical is saying something else, then that's where I actually hit at a strong confusion, and suddenly I'm feeling like, what am I going to do now? I can't really tell. Then I probably want to stay away, you know. Technical analysis over everything. Well, for a retail trader, we like to assume that technical analysis over everything. But if you go stand in front of a hedge fund manager or go stand in front of a bank analyst and you're saying technical analysis over everything, they're probably going to slap you in the face, because for a retail man, we are looking at a very tiny aspect of the market, and our trade are usually based on, like, quick in and out to just make a meal for the day. But if you're talking about huge corporations that are looking at the bigger scope of the global economy, then they cannot. It's a taboo for them to even assume to rely solely on technical analysis to make any meaningful decision on the market. That's why I'm creating a product, right? I'm creating a very strong product. I don't want to talk much about it. I always am an action man. Like, I always come with boom, you see the results than talking. But that product, I assume that it will be like the game changer for traders all around the world. And I assume that is what is going to really, it's like putting retail traders on the institutional level. You get what I mean? Because, like, how many retail traders have access to Bloomberg Terminal? How many retail traders have access to Seeking Alpha? How many retail traders have access to Reuters? How many retail traders have access to what's the other one's name? There's so many institutional platforms that we are not privy to. We are only just used to using the Trading View, MetaTrader 4, and putting all those fancy and funny indicators on it. But if you go look deeply into the kind of things that or data that is available to the people that we are competing with, right? You must understand that we are competing with them. Like, business aspect of it, if you say competing, does not really make sense. But on the global, not on the global, on the bigger scope of it, then you can only assume that yes, you are competing. Because at the end of the day, it's like the direction of the market is what now leaves us to, are we competing or not the money being made. And when I talk about the direction of the market, let's say we're talking about a broker being a B broker or an A broker, right? That one, you are now chasing the money. But if your focus is on who is an A broker, who is a B broker, your priority has been misplaced from the fact that even if it's a B broker you're trading on, and then you're saying that this market is going to go from 1.2 to 1.4, that B broker has no influence in changing the direction of the market. At that point, you're competing against the institutions. They are saying this market is going to go up. So do you have that technical knowledge to also be in the right direction, that regardless of how manipulative a platform you're trading with, it's not going to affect your trade outcome? Some of these technicalities are what I focus on. That's how come I don't exert so much energy talking about who is cheating who and who is the best broker and who is the this and that. And even though regardless, I still use the best of best brokers, which is like Express. I kind of really saw that somebody saying that Kojo, you hardly also talk about Express Funded. I mean, Express Funded is an independent company. We have huge operations going on the back scene, and I recommend it for everybody. It's my proprietary trading firm. It's my proprietary trading firm, But you see, we're so used to running things on the traditional way of carrying it and hawking it around on our head, like, hey, everybody, I have Express Funded this and that. Like, but if you're building a global unicorn, right, you sometimes want to like or run affairs or operate behind the scenes and let the firm operate at its own pace and at its own strength. But trust me, I'm at the very core integral decision point on everything that runs around Express Funded. I say core integral decision part. I mean that everything that has to do with the firm's progress, the firm's stability, the firm's innovativeness, the firm's promotion, and the firm's everything. And then I like I said, that if I have my heart, mind, soul, body, everything towards achieving some purpose, then I don't play. I have sleepless nights over seeing how we can take Express Funded to a very crazy level. And then we're doing extremely well as a firm. We have huge, cash base, like sitting on a huge pile of cash, just so that our firm is one of the most, we're not really like, what will I say, what was the right word to even put? We're not, I'm not finding that right word, but let me use just a plain language. We're not too cash centered, you know, in the sense that, like, I'm talking about the owners of Express Fund. We're not cash driven. That what are the numbers looking at? We want to make profit. We want to do this. Like, no, for us, we don't even care about the numbers in the firm per se. All we care about is that 5 years from now, Express Fund is going to be running. 10 years from now, Express Fund is going to be running. 20 years from now, Express Fund is going to be running. And it can only happen when the firm is extremely healthy, strong. And then for a company which is inanimate, the only thing that can guarantee its healthiness and strength is by its liquid cash, right? And it's by its liquid cash. And that's why we are continuously progressing and making sure that Express Fund does not wither away like we've seen so many other proprietary trading firms come and wither away. We are in for the long course, you know, because like, you see, it's so logical to think about it this way. Ask yourself that, like, Kojo and the twins have started Express Funded. The twins have all the numerous cars you can think about. Myself have all the numerous cars you can think about, including even this beautiful one that you're seeing here, right? Including this one. I've not parked though. I have to come and park it. And the red one, which is going to be back very soon. now I have a huge estate at home, right? So you must understand that my motivation now when I'm starting any new corporation is about legacy. And it's about empowerment. You know, the two primary focus on any new corporation that I'm starting is legacy and empowerment. Legacy for like the footprint that I'm leaving behind, and empowerment for the new young ones to also be able to have some sustainable capital to leverage on to go to the next level. So for the person that is asking, Kojo, you hardly talk about Express Funded. I hope today I've spoken enough about Express Funded that allows you to be convinced, and then you can understand the vision of the firm and you're excited about it, right? We don't want to start operating Express Funded for the next, let's say, 20 years. I mean, let's say even 1 year down the lane, 2 year, 3 year down the lane, and then when the firm is doing well, the traders are doing well, in fact the owners as well are doing well, they start pointing out, hey, look at this man, since he started Express Funded, now he has this one. We have all of those things. I don't need them. My twins don't need them as well, you know. So it's all about, like I said, empowerment and legacy building, right? Which you have that already. Back to FOMC. Like I said, I'm already assuming that the rate is going to change. I have the strong feelings in my mind, in my heart, telling me as well. And for a long time now, if there's something that I've come to really understand, my instincts are hardly ever wrong, if not for anything at all, not when it comes to the market. My instincts are extremely, if my instincts telling me that the rate is going to drop, trust me, 99.9 of the time, it's actually going to drop. You know, and I've not even watched it. You realize that I just watched it firsthand with you guys when I straight away went to Forex Factory, and then straight up I was able to say that this thing is gonna drop. You know, and that's like my sixth sense speaking to me. That's not even coming from an analytical point of view. It's coming from the experience of a long, 11 years of being a trader. Anyway, let me park the car. Then I go inside. Then I also watch the chart. I've not actually been able to read your comments though. I don't know what is going on in the comment section. But if you're here and you're saying something nonsense, just know that I'm going to block you, by the way. If you're here and you're saying something trash, trust me, I'm going to block you, and then you're not going to even see my notification or anything again. That's for sure, dude. I always read comments. I always come back to read comments regardless.